Do you know how much life insurance you really need? Most people don't know how much life insurance they need. Imagine you being the breadwinner of your family, leaving your family tomorrow. God forbid, I hope that doesn't happen. But just imagine for a second. Would your family be okay for the next 6 to 12 months without your income coming in? Meaning bills are paid, kids are good, kids are still able to live a life that they're already living or better. Will they be protected? The harsh reality is life is unpredictable. So my name is Latarcia Hall. I like to go by LT for short, and I am your neighborhood life insurance agent. I'm just here to give you basic terms and concepts that you can really take with you and implement them. My ultimate vision is to empower a generation of creators, entrepreneurs, and history makers to build a sustainable legacy that leaves a lasting impression for themselves and future generations. So let's get into it. Life insurance is not just a policy. It's actually a promise. It's a promise to protect those you love when you're no longer there. But the question is, how much of that promise do you actually need? Many of us go through life assuming that our loved ones will be okay financially if something happened to us. But the truth is, most families are underinsured. And by the end of this video, you will actually be able to have a number at the top of your head of how much life insurance coverage you may actually need so that you can make sure that your family is protected from any unexpected losses that may happen. I actually sat with my grandma recently and I asked her about the policy she had on herself. And all she said was 5. And I'm like, okay, she got like 500,000, 5 million, you know. That's where my head going. Like she got a lot of coverage. And she said, no, baby. I got 5,000. That like took me away. 5,000. So it turned out she got a policy like 20, 30 years ago. She got it for dirt cheap. It was like 20 bucks or so. And so she done had it since. $5,000. And I don't know if y'all can agree with me, but 5,000 20, 30 years ago is not the same 5,000 today. That 5,000 barely covers half the funeral expense that we have in today's age. And so this really made me think that there's so many families that's out there that may be in the same situation that my grandma and my family is in, that don't really know how much life insurance they really need, don't have any clue on where to even get it right now. And so two of the main reasons that I realized that minority families actually have this issue is that, one, they really overestimate the price of life insurance. They think it's too pricey or it's out of their budget. But in reality, there are some life insurance policies that actually give you the greatest amount of coverage for the least amount of budget. And two, they just really lack the exposure and the awareness of the financial education of how life insurance works. So I feel like one of the solutions that will actually help families out by them actually being able to know how much life insurance they may need in a particular situation that they are in today. So what determines the right amount of life insurance coverage? It really just depends on your family's unique need. We'll break this down into key factors. First, let's think about like your income. So if something happens to you, how will your family be able to replace your income? Next, consider debts. That's anything from mortgages, credit card bills, student loans, anything along those lines. Then there are future expenses. So this range from your kids' college education, your long-term care. And so all of these things take into factor of how much life insurance you may need. To help you calculate the right amount of coverage, we are going to use the D.I.M.E.L method. I love using this method with families that I sit down with because it's so simple and it's something that anybody can do because it's basic adding. So like I was saying, this is called the D.I.M.E.L method. So of course, this is an acronym for D is debt. So basically, debt is if you add up all your outstanding debts. What does your credit cards have? Anything like cards or anything like that. Then next, we have I, which is income. So income is basically you determining how much your family will need in order to replace your income when you're gone. And so what I like to do with income is times it by 10 years. And so that will give your family 10 years of income replacement on your behalf. And so M is mortgage. And with mortgages is really you want to factor in what's the remaining mortgage balance that you have. And if you don't have a house, that's perfect. All you really have to factor in, if you want to, factor in how much rent your family may need or whoever depends on you may need. Next is education. Education comes in is really calculating the estimated cost of your children's education. Maybe you have younger kids. They're probably 8 and 10 or 3 and 4. And so you're really thinking about like, okay, if I can give my kids a better life, would I put them in private school? Would I want to put them in the best university out there? Maybe you don't even want to have them go to school at all, and you want to show them how to build a business, build real estate, build some kind of skill set to where you know they will accomplish and actually continue that lasting legacy that you are already building yourself. And then next we have long-term care. And so with long-term care, you really want to consider the potential long-term care expenses, because right now, even in the state of Florida, long-term care is about $117,000 a year. Imagine a family having to come up with $117,000 a year and extra expenses in order to take care of their loved ones or somebody that may have gotten cancer or any kind of disability to where they need someone to actually care for them. This really affects a family because like most families are living paycheck to paycheck. Like I said, imagine coming up with over $100,000 in extra income to actually take care of your family and make sure that those expenses are paid for. And so with this method, you'll be able to calculate how much life insurance you really need. So if math is not your strong suit or you really just don't want to do any calculations, I got you covered. Like I got you. Just click the link in the description below, and it actually has a free life insurance calculator in the description so that you can actually just go on there. It does all the calculations for you. All you got to do is use the sliders, and guess what? It's going to pop up on the side of how much life insurance you really need, and then you can go from there. So let's make a more concrete example. So imagine a 34-year African-American guy. His name is Michael. And so he's married, 2 kids, and he owns a home. He has a stable job. Let's really calculate his ideal life insurance coverage using the D.I.M.E.L method we just went over. First thing we want to tackle is debt. Let's say he has about $25,000 in credit card debt. He has about $25,000 in student loan debt and a car of $15,000. That's roughly $65,000. Next we have I. So his income is $75,000. And so what we want to do is times it by 10 years, because remember 10 years is that income replacement. Of course you can do more if you choose to, but 10 years is that sweet spot. And so that's going to be about $750,000. And then when you go to M, which is the mortgage, we know his mortgage is $300,000. And then E, since he has 2 kids, he estimates a total of about $100,000 for both kids, which gives you $200,000. And then we have long-term care. So with that long-term care, Michael wants to ensure his family isn't burdened with long-term care costs. So he estimates a potential need of about, I'm gonna say $150,000. Of course, it can be much more than that, but in this case, we're just gonna keep it simple numbers to where it's not too much. And so with that being said, what you wanna do now is add up all of these numbers together. And this will give you your ultimate total coverage Michael would need. So now let's bring up the calculator so you can see exactly how this is done. So first things first, let's do $65,000, which is the debt, plus $750,000 plus $300,000 for the mortgage, $200,000 for the education, $150,000 for long-term care. So this puts him at almost $1.5 million. So imagine most people probably only get 10, 20K, 100K term policy or something like that, and don't really know how much they really need. Debt alone can wipe some people out. And if it's not debt, it's usually mortgage. If we got like a typical family scenario like Michael's, where he's 34, 2 kids, home, $65,000 in debt, which is like student loans. Imagine what kind of burden that'll be on a family if they didn't have this type of coverage on them. By following the D.I.M.E.L method, you've taken a huge first step in determining your ideal life insurance coverage. I want to reiterate this, that this is just a starting point. This is really just an estimate too, because there's multiple things that you really have to take into effect. Some people have businesses, some people already have estate planning and retirement planning and everything to put into place in this as well. So this is just a starting point for if you maybe have a term or a whole life that doesn't have much coverage. This is just to give you like awareness, takes the blindfold off and shows you how much coverage you actually really need. So at the end of the day, your life insurance needs can fluctuate based on changes in income, your family size, your financial goals. Like any little thing like that happens on a day-to-day basis can actually change how much coverage you actually need. And building a strong financial legacy actually goes beyond just life insurance, because of course you want to protect what you earn, what you own, what you owe, and what you love. Those are the four things that I would say that you want to protect, and it's really going to set that foundation. So actually in my next video, I'm actually going to dive deeper into how to structure your financial home and just going deeper into ways you can build long-term wealth in an all-around lasting legacy.